Gonna go to lazy Friday opening. Most people that are trying to guess which way this market's going, I mean, they're scratching their heads. It's like you just have to give up on that. You'll be fighting those emotions constantly every day, trying to figure out which way to go, which way to go. And you know, it's just not a good state to be in constantly. Let the market come to you. Let the stuff run. You know, a lot of people say, well, you got to let your positions run. I was like, if you're put into a situation where it's beneficial to you, that's fine. Like a gap over your sell limit, that would be fine. But other than that, no, you have to be taking profit. It's like something that's moving. If you can guarantee me that it's going to go from $10 to $100, then I'd say stay in the position. But there's no guarantee. It might get to that $10. It might be years from now. But it's just a fact that, you know, the more times that you can sell something, the faster you're going to get to that destination. One time sale for $1,000 profit, there's a time element there, and nobody understands or knows when that's going to happen. They think when they first get into this, they like, oh, hey, I'm going to buy this for $100, and I think it's going to go to two. Or, I mean, where do you get that idea? You know, because you looked at some chart that in the past it was $200. I mean, there's so many variables that go into why it was at $200, and you're buying it at 100 saying, I think it's going to go back up there. It's just looking at the chart and saying, hey, it's at all-time highs, and I think it's going to come back down to where it was 5 years ago. I mean, it might. I'm not saying it can't. Anything's possible, but the probabilities are not real good. So you can, you know, you can short the market all you want, but there's a lot of money in the market right now, and people are losing their butts left and right that are shorting this. And I'm not saying that some people aren't profiting from, you know, the moves, but what are they doing? They're taking those small profits, whether it be, you know, $10, $5, whatever. They're looking for numbers, you know, and the numbers are the key. It used to be, you know, throw your money in the market because it was $50 to trade something. Well, you need to, if you bought 100 shares of something, it had to move, you know, 50 cents for you to cover your fee, or it had to move $100 just to cover your, or I'm sorry, $1 just to cover both sides of your trade. So, I mean, we don't have fees these days, you know, on equities. I mean, of course, all your derivatives, you know, your options, your futures, they all come with fees. So you have to work that into your profit structure. But if you're not very good with money, you need to get good at managing money, because you can make a lot of mistakes. You might be, you know, trading all day long and come to the end of it and it's like, oh, I made $5, and you stayed on your computer all day long trading up and down, up and down, up and down, and the fees killed you because you're trading, you know, you're trading a product that you don't really understand. But it's Friday, so we're going to look at the scan from this last week, and you can see all the positions that we had in here. You can see when the dividend dates are. You know, there's several different ways to trade or go after what it is. The strategy is all up to you. If you use the scan, I mean, you can be like, okay, hey, I'm going to buy it on the limit. We'll just use AbbVie for example. I'm going to say, okay, well, hey, I want to target that limit price, right? Well, if it closed at 108.25 and this is the limit price, right? That's in direct correlation with the dividend. And you're just subtracting this amount. So if it comes down and hits 103.05, I'm in. But if you already own it, you don't, there's more to the strategy. So you just leave it alone. Two, if you're under 10%, the number of shares, you can't buy it. So the other strategy would be, okay, I'm going to buy it. I don't own it. I'm going to buy it on the close on Friday. The price means nothing. These are just strategies on how to get into positions. I like buying on the pullback. I do buy on the Friday, depending on where it is at the in the 6 month window, and then the max shares obviously are based on the size of your account, right? The max shares are the same no matter the size of your account, but the percentage of the max shares that you can buy is dependent on the size of your account. This is just an algorithm I came up with so that you're never overextended in any one product, right? And this goes all the way up to $1 million. It changes after $1 million. So now you're looking at yields, right? This is just what the yield is, the dividend divided by the price. Now, if you're having trouble understanding that, I don't know why it's so hard for most people. I don't know if they're not teaching it or whatever, but if you got $5.20 coming to you per year, per share, you divide it by the price at the end of the year, right? Or right now, it doesn't matter, right? And you multiply that by 100, you come up with 4.8%, right? So obviously, the dividend is based on the price, right? That's going to be your yield, 4.8, right? So if the price goes up, the dividend stays the same. Price goes up, divide that by $120 at the end of the year. Multiply that by 100. Now your yield's 4.33, and vice versa. The price goes down, the yield goes up. So yield doesn't tell you the whole story, but the dividends do. Some folks that use my system, they target dividend amounts, right? They're saying, hey, I want these bigger amounts. Yet others may target the dividend vega. And I've alphabetized this, but you can, set this up. If you stick it into Excel, you can change, from high to low, and you can find those ones like 3 being higher, meaning volatility is higher. You can target those ones. You're looking for movement. So there's several different strategies that you can use. And, I talk more about that one-on-one, with clients that want to figure out, how to trade during the day. Now, I use one strategy exclusively on here for people to watch, so I'm consistent. I don't switch it around. Now, if we look at, where is it? Yeah, if we look at the amount of shares, right? You can still have under 100,000, but you're trading it differently as the price comes down, and that's just part of the strategy. So that's just a little bit, you can see that we had, I think it was 159 came up on the scan. I mean, I've seen weeks where you're down to 4 or 5, and it's just basically protecting you, from getting in. So the scan's telling me that there's, for this week that there was more up movement. And what happened? It went up. In weeks where it's just not, we don't have a lot of underlyings here and enough stocks, it's probably going to be a pretty light week as far as movement goes. But you still get some of these that have the high vega, they're going to be movers. Now we always keep, a good supply of CEFs because they pay monthly across, and a lot of institutions use them as well because they like that constant dividend payment. Like 30 days, is pretty good to, actually get paid. It's kind of like, monthly rent on some rental property. If you figure, let's just say you had, most of these institutions are putting, millions into these things, and they're getting 10% back. Divide that by, if they're making $100,000, divide that by 12, and that's what they're making per month off these CEFs. So don't poo-poo, CEFs just because you think they're cheap. They're basically, regular funds. I kind of shy away from ETFs because they do have pretty high fees. Now you have to be careful with some of the CEFs because they don't, you need to look up the structures on them and how they pay the percentage of dividends versus how much you're actually making. Because you may need to hold them for a while, but I don't sell anything unless I can profit off of it, so it doesn't really come into my equation. I would never sell something early. Something like this CRF might have been in this portfolio. I'd have to go back and look, but this particular portfolio could have been in here for years. Who knows? But money's pulled, put into other accounts. We shift stuff around. Try to keep these accounts fairly small. You can pull cash out, and I think this account has like 5,700 in it. So you have to have some extra cash in there to be able to trade them. We haven't entered into a bull market, and who knows if we ever will, but you always have to have some cash there. If you have to add some, if you're working, you want to keep a little bit of cash in there to, come into the next scan, into the next week. It's opportunity, it's occurrences. So we're taking, what we're doing is we're nibbling. We're taking a little bit out of the market at a time. Hey, if you start, when you start looking at like time and sales, and you look at the size of some of the positions people are taking, I mean, they're swinging for the fences, right? Well, that's a red alert. For most of the algorithms that are out there, they go after stops. People that are putting big money in, they're putting stops, and they're trying to protect their capital because maybe that's all they have. If they're putting 10 grand in, and you're just starting out, say, well, I'm just going, I'm going for it. I need to get a 10-cent move, make $100. And these algorithms are looking at that stuff, and if you're putting your stop in, they see it, and they go after it. They move those markets because they're like, hey, that's easy money for them. You have to remember, they're playing both sides of the market. They're not just playing what you're playing. There's always somebody on the sale side, and there's always somebody on the buy side. But if you're nibbling away, you're just some small fish that they don't care about. And well, one of my friends called it remora, living off the shark. Shark's taking all those big bites, and all you're doing is feeding off that shark. So let all those big whales or sharks or whatever you want to call them, let them take all those big bites. They might have the capital, maybe they don't, but we can't see everybody's account. So if you want to build your accounts, you'll see positive gains. Not only will your dividends increase, but your trading profits will increase. I think what are we at now? I just did let me show you this chart if I can find it. Yeah, here it is. Yeah. All right. So here's a chart that I put together. Let's extend this a little bit so we can see. Okay, so we're getting paid 111.76. We got about 7 minutes left before they open. And you can see, we went back to the 25th and just making up these columns just to show you, like, we're not even talking a month here, right? And you can see there's some days in there, like here, weren't paid anything. Weren't paid anything on dividends. These are days, light day there, 11 cents. Because towards the end of the month here, this is just kind of what, the 19th. It's just when the accruals from your account are paid to you. It doesn't mean that you made dividends on that day, because today there is no dividends being paid. There's no stocks paying ex-dividend. So this constant growth here. You have to remember these are small accounts. This is a cumulative of three accounts, right? So you're looking at about $120,000 bringing in so far this month. That's dividends and profits combined so far. We don't have any profits yet from trading because the day hasn't started, but 1,259.16, right? So if everything goes down today, guess what? We're probably not going to profit anything. We'll have a 0 day, correct? So this is what you need to focus on. So your cumulative profit keeps on going up and your dividend profit keeps going up. So if you lose one stock, let's say this try rate here, and you've got $261, guess what? If you divide that 261, let's say you lost 3 of these. They just went out of business just tomorrow. It didn't affect your account. Your account is still growing. Now, if you lost $1,500, you would show a negative loss on the month. But what's happening is, if you're investing in companies that are paying dividends, it means they're making money. Now, unless somebody's crooked, if you don't trust the companies that, the SEC is regulating, then, you'd be careful, do a little more research. But as far as I'm concerned, if they're paying a dividend and it's increasing or staying the same, I'm interested. We also have like a cap, or a bottom limit, $1.20, unless it's a CEF, because we like those monthly dividends coming in. So it's important if you're growing your account, like you can't, you won't be able to see it until you've done it. It takes patience to see this happen because everybody wants that $1,000 right now. Well, it only took let's see, the 25th, less than a month to make $1,259 just working your accounts. Now, most people, what they do is they just collect those dividends, right? So you'd make $576 off 122. So that's not real great, is it? And still the month isn't over, but 30-day period, whatever. But still, that's positive. But look what happens when you bring in trading. Okay, you start adding to that. This is the key. This is what Warren Buffett did. He tells you, buy and hold, but he doesn't. He doesn't do it. You can look at his portfolios and see that he's constantly in and out trading. If the thing goes up, they take a certain amount of profit. But we're talking hundreds of thousands or millions of shares in his accounts, in his portfolios. So we're not on his level, but he's using this same strategy, taking profits on the way up and buying stuff on the way down, buying it at a cheaper price. He obviously has, a strategy that he uses, and he looks at companies really in depth. But I mean, it's no different if you looked at some of his portfolios, or even all these other gurus that are out there. You'll see that they take profit, and the majority of the time they're making their money off of dividends. Millions of dollars a year. So the whole idea is to get the numbers up, but don't sell yourself short and just buy one company and sit on it. I mean, you can do that. That's your money. You can do what you want. But I'm just offering people a different way to do it and a different way to attack the market. But okay, well, we're getting ready for open. Let's go over to this one and watch and see what happens, because this is a little bit more visual. We need some pot. There we go. Whoa. That sucker jumping up there. They're still a ways away from, I gotta go to 966. This has changed symbols over the years. I've had it in several different accounts. It used to be a really good pair. It's starting to come back a little bit. I think it was called Oak Tree Capital. You can see it from 10.5 to 11 to 12. So this one's kind of ramped it up. It's kind of an interesting one to watch. SLVO is up and down like a toilet seat. Good dividend payer, monthly dividend payer. Let's see what we got. I posted something about Morgan Stanley wanting to buy something. It was a Bitcoin exchange. So looks like they're cleaning out a few deals here, but we're going to get back involved in it because we bought and sold it yesterday. Looks like we've got 23, so we can do 2 shares. I'm going to trail that down. And what do we got? And we're in. Okay, so that's 1. And UNB. Big drop there. I like those. This one we got a max shares of 42. We can go 4. I needed to put this on this other account. You don't have to be in a hurry to do this type of stuff either. I mean, I see people rushing around all the time. It's like, hey, this stuff's not moving that fast. Take your time. Don't make mistakes. You know, every once in a while I'll make a mistake and put in max shares by accident. Yeah, it's just when you do this every day and you're working, 12 different accounts, you can make mistakes. You just have to be, willing to look at the stuff and go back and say, oh, that was too much. I bought way too much. So we got 4. So trailing that. I do use a lot of trailing stops with this particular strategy. There are times when I just use the limits. What do we got here? I'm going to go 122. Okay, trail that. So look at BTR. We've had this in the past. So do 20. And then you can see how you can spread your money out by using good risk management based on the size of your portfolios. So if you had this all in one account, obviously you'd be at 20, right? 20%. So, but in this case, I'm just showing you on these small accounts because we don't add money to these. We're just showing you how you can grow them. And then, once they get to a certain point, we'll open another account, or we'll just shift money around and, not buy on that account for a while until it, gets rid of a few positions, let it drop back down to keep it in the low 50s or down to 20, depending on what size the account is, and just show you how you work them. It's not rocket science, you know. It's just money management, but you have to be willing to take the time to learn it. Oop, so, you know, almost put in 20 there. It's supposed to only be 2. And trail. Well, I promise you, if you get this down, you understand it. Okay, like that. I'll be below my close. There we go. All right, so BTR. Now, of course, these haven't activated yet. These are trailings, right? So we're not actually in these positions yet. Go back over to this other account. And you never know what the market's going to bring you. It might just be dead today, you know? Who knows? But we have a specific thing we're doing, and whatever's left on, we do the same thing every day. We don't change. You don't change something that's working. If you do, which most people do on a day-to-day basis, trying to, you know, well, that didn't work, let me try this. Well, that didn't work, let me try this. It's not going to work 100% of the time. What you're trying to do is win, you know, a minimum 51%. The rest of the time, you're just going to be stuck with those stocks collecting dividends. Well, that's a really bad thing to happen, right? No, that's perfect. That's what you want. You have multiple companies paying you dividends instead of just one company. So we're going to buy, and what do we got? SPB 2. All right, we're going to go trail. Okay. We don't care when these activate. We just know that it's fit our criteria, right? Because it's in the scan. So we just let things happen. We let the market come to us. So I don't know where this market's going. Is it going up? Is it going down? It can come up and it can, you know, smack that, and I'm in at 84.40. But if it changes, it goes any lower than that 158 trail, then you know, I'll get it at a better price. So it's basically I've bracketed it. So we'll just take a look around. I'll go back over to this account. Spoke too soon. WD. So it looks like we're trying to get all set up. But let's see what we get. Some coming down, some going up. It don't matter to us. So what do we got? WD. Let's see if that's on the scan. Yes, it is. Take a look. WD. So I got up there pretty good at WD. Okay, so what do we got? 13. And it's like, oh, you're gonna get stuck with all those companies when it comes flying down. I was like, and what's your point? Add up what you're gonna get paid per month if it comes down. You can't be afraid of the market coming down. If you are, please, here we go. We got a trail on this one. What's it gonna be? CMP. Did that get down as far as it needed to go? 106. Yeah, that's weird. No, we're not going to buy that yet. We need this somewhere along the line. We didn't get that right. Close 106, 104.30. Got to come down a little further for me. And so you can catch those. Sometimes the scan makes you a little mistake, but so TRV. Okay. TRV. Looks like 11. GPM. So we hit WD, so now we can go back to it. What are we at here? Trail of so 290. There's 310. Okay. TRV. All right, CMP. CMP. All right, we sold that yesterday, I think. So let's see, CMP. Let's see, max shares 20. We're going to buy 2. Trail that. CMP by JPM. Another one we bought and sold. JPM is 12. Buy 1. Trail that by 330. Oh, bring that down a little bit. Bring it down to 3. There we go. Okay, we got JPM, LCII. Just waiting. Okay, LCII is, okay, that one's we cannot do because it's too small account. The max shares are too small. We'll move on to the next one, ADI. Looks like 11 shares. Is that still correct? Yes. So we're going to buy one. And add another one to the alerts. And we're going to trail that. ETN. See, we get another busy morning because could mean anything. People jump to all types of conclusions. I don't care what it is. I just stick to my program. So we got two. No, that's not good. Let's see, what's the close on this? 49.54. I don't know why that alert was there. It should be down here, 146.14. Oh, we're not into that one yet. All right. Okay. So SPY, we all know what that is. RE. Okay. SPY. Not going to worry about that one right now. That's just one I follow. It's not on the scan. ALE. There we go. Let's see. And buy two of those. ETN. Okay, ETN's not on the scan. Let's see. See if it's in the other account. NDT. Looks like everything's coming down. Interesting. Okay, so let's go over here and take a look at we had one buy. Let's get the sell order in there. Yeah, CHY. So there it sits, and we know exactly what we're going to do. If we can get the order in. CHY plus $1.20 and 13 comes to another additional 8 cents. We'll go 16.10. you don't know what your markup is, you know, you'll be struggling because you're just coming up with a number that sounds good. Like, hey, I want to make X amount of dollars. It's like, take, just come up with something that's reasonable. But I like targeting the dividend yield or the dividend at the time that I bought it because your yield changes. All right, so you see, not everything is coming down. There's a lot of stuff moving up. But anyway, let's continue on with the, I still got a few more to do here. RE, we still got time. And then you got about 9 minutes. Okay. And so, good. Looks like it just paid dividends. RE, yep, 16th. And we can't trade that. It's not, it's on the scan. It's too, basically too expensive. MDT. And there it sits. 15. 2, 5. Bring that down to 2. Looks good. Okay, RJF. Say RJF. There it sits. Okay, so we get a long on Zion. Now it's 57.41 plus 36 plus 34, so 59.15. So we're already in RJF. I don't have to worry about that. We already have an alert in. I don't know why that alert's so high. Let's put that alert a little closer down here. There we go. We don't need to have that much warning. And ESS. It's another one that's not able to be traded. I'll go back to SPY. Let's take a look at it on our favorites and see what's up. Okay. We want to get involved in it. Nah. All right, we got about 2 minutes. Friday's usually pretty slow, so I've got some other accounts I've got to get updated, and I don't see too much going on today. It's like whatever happens, happens. Let's take a quick look around here and see what's actually happening. Oh, looks good to me. Oh, half up, half down. I bought and sold that one yesterday. And buy it again. Just remember, nobody knows where this market's going. But it's Friday. I want to get most of the day to myself, so I'll be back here at 2:30 or 3:30 Eastern, and we'll go back to it. But we got one trade in here. Hold on a second. Guess we bought CHY on this account too, so let's get that one buttoned up. Didn't hear that one. 1481 plus 120 plus, what was that, 13, so 8, 1610. All right, another 8% per year, or in one trade to make 8%. Still growing. That's what we're after. Positive stuff. We haven't sold anything yet today. That's okay. It's a slow Friday. Looks like we had a pretty good week. Let's see. I don't know what that total comes to. We'll figure it out. And then let's see what the other one looks like. Considerable amount of trade. Let's just put them all together. A lot of buys, a lot of sells. No losses. That's the key. But yep, you can gain something from that. Hopefully you will. Talk to you this afternoon.